Two countries are going to fight it out in their own unique ways over gold, which is still causing serious problems in the supply chain. We can learn a lot from this when the gold market changes. While discussing taxes, let's talk about this. In the US, you've probably heard a lot about it from me lately, as I've gone over the various states' moves to demonetize gold and silver and acknowledge them as legal cash. It turns out that taxes are another tool being used to influence the gold markets in two countries. In this section, I will be making reference to two works. The first one is now taking place in Indonesia, a gold producer of enormous scale. That is, without a doubt, one of the top 10. The publisher of the Gold Fix newsletter, Vincent Lancency, has written an essay on the subject, and I will be citing it here. But first, I'd like to remind you that each of us has the potential to become a possessor of gold. These awesome small wallets are sold by Summit Metals, which is a fantastic company. Right there, you have enough gold to fill a 10-count coin. The sheer magnitude of something becomes apparent the moment you gaze upon it, however, astoundingly cool. So, read the description below to learn more about them and see firsthand the excellent customer service they provide. An important policy change for one of the world's leading producers, Indonesia is set to implement a new export tax on gold goods by the end of next year. This move is part of the government's aim to increase domestic processing and refining capacity. Shortly after the announcement, gold-linked stocks began to fall. Her determination to use taxes in this fashion is almost palpable. Officials from the Ministry of Finance's Fiscal Economic Strategy, Fabio Nathan Karabjabu, reportedly informed lawmakers that the policy is nearing completion. The duty, he explained, will depend on the kind of product. Duties will be between 7.5% and 12.5% when the price of gold is between $2,800 and $3,200 per ounce. The rate goes up to 10% to 15% if the price goes over $3,200. According to Fabio, the minted bars will be subject to the lowest levy, but the door nuggets, ingots, and cast bars will be subject to the highest. Now you understand the situation. Imagine it as a type of market engineering involving the gold market. As investors evaluated the impact on margins, shares of domestic miners declined. Maradika Gold Resources fell 3.5%, while Archie Indonesia fell 5.9%. It further proves that taxes are generally bad for the economy. Okay, so this is the situation in Indonesia right now. I see it as an integral component of their plan to refine most of the gold outside of the nation, while keeping a large portion of the gold in-house. Therefore, they would want to keep it domestic. Before a recent decline, the price of gold soared from 2,565 ounce last year to a record close to $4,400. Rising investment and market activity surrounding the metal have been observed in Indonesia, the 10th largest gold producer globally. An exchange-traded fund, ETF, for gold was approved for debut in July by the Indonesia Stock Exchange. The biggest gold initial public offering of the year, which was 4.6 times oversubscribed, was conducted in September by MDCA Gold Resources and raised 4.66 trillion rupiahs. Since then, the Pani gold mine has been operational with an annual ore production target of 7 million metric tons. Retail gold prices recently increased by 27,000 rupiah in a single day at Aneka Tambang, the biggest bullion producer in the country. Yeah, the one that's 10 times the normal daily move. The head of the Indonesia Mining Association has justified the export tax by arguing that domestic demand is outpacing supply. Thus, due to the supply chain problems, he wishes to somewhat limit it. Even though the country produces over 150 metric tons annually, he stated that Indonesia still needs to import over 40 metric tons. Many in the business world are worried about how this regulation may affect their premium items. The head of the Indonesian Mining Association, Hendra Sidek, argued that refined bullion shouldn't be taxed or barred from export. While the program would improve the trade balance by shifting exports towards higher-value marked products, economist Joshua Parderdetti of Permente Bank warned that increased taxes cut into upstream income and might hamper investment, postpone new projects, and finally diminish production. In addition, Ferrio brought attention to the fact that the government intends to restore coal export tariffs, which were abolished in 2006. This is in line with Indonesia's larger plan to increase local processing and value-added products through downstreaming. Since they intend to hoard a significant amount of gold for internal use only, it functions similarly to a tariff. Unprocessed dorabars are subject to significantly higher taxes in an effort to keep them from leaving the country. Keep in mind that there is still a lot of work that has to be done, but that there is still a lot of money coming in. It's in this way that taxes are used as a tool for social engineering. It occurs naturally all around the globe. Regarding it, there is no doubt. That concludes our tale. The following report is sent to us by fashionnetwork.com in Italy. To include private gold holdings into the official economy, Italy is considering a one-time tax. Well, look who it is. This proposal offers an alternative method of using taxes to influence economic policies and social engineering. It proposes that people be subjected to a 12.5% tax on the market value of bullion, gold, jewelry, and collectible coins without purchase records, which is the same rate as the tax on government bonds. June of 2026 is the deadline for completion of the certification. The present regulations impose a 26% tax on the total sale value, not merely the capital gain, in the event that purchase receipts are not available. As a result, some transactions involving inherited gold have shifted to informal or undeclared channels, and others have been deterred from selling on the legal market. Do you think it's evident that that will result in such extremely harsh tax? Both market liquidity and tax income are reduced as a result. Privately held gold in Italy is estimated by some to be between 4,500 and 5,000 metric tons, or about 500 billion euros at current prices, according to lawmakers from the co-ruling League and Forzilla Italy party. The network of comprors in Italy, which deals in the buying and selling of gold, has witnessed a dramatic increase in activity due to the record high prices. Used gold sales will increase by about 25% in 2025. Every month, over 1.2 million transactions are fueled by households selling their old coins and jewelry. An Italian newspaper called Metropolitan Magazine reports that taxpayers who choose to participate would be required to declare their assets at market value and pay the substitution tax in either 1 or 3 installments per year. The tax amounts to around half of that total, so that future sales might be based on an increased fiscal worth. Strict anti-money laundering procedures would be implemented to monitor this process by authorized advisors and intermediates. On the premise that 10% of privately held investments in gold are certified, proponents of the measure claim it could bring in up to 2.08 billion euros in additional one-time revenues for the Treasury, all while bringing transparency to a market marked by opaque holding and informal family transfers. Let me tell you something. As you may be aware, there are a variety of straightforward ways to verify the authenticity of gold. Neither the government nor a tax are necessary to inform you of that. However, this is a component of Italy's economy, so it's important to make it official. Given that they are experiencing a loss of money, it appears that they are reducing the tax in order to encourage individuals to utilize the legitimate channels. Affluent tax rates. One more thing to remember. Raising taxes is a surefire way to dampen spending, which in turn will strain government coffers. Almost without fail, that will accomplish the task. Certainly, this teaches us something important. By doing away with what stakeholders perceive as a punitive rule for those who cannot provide proof of purchase for purchases made decades or even centuries ago, the plan hopes to promote the legal circulation of gold. Parliamentary and executive clearance of the amendment are still required. Honestly, reducing taxes is the bare minimum they can do. Personally, I think the taxes should be taken out of it, but that's just me. Still, it's insane. However, in American parlance, gold is a metal. Everything made of gold is subject to capital gains tax, even buffalo and eagles. A government-issued point should not exist, alas. But I don't think it should be subject to capital gains tax at all, as gold protects us from the places where inflation is taxed. Its depreciation is a hidden fee. Already we've paid our taxes. Please don't misunderstand. You are already subject to double taxation in your entirety. Moreover, in the majority of cases and methods, it is more likely to be 3, 4, or 5 times your tax. Forget it. It's insane. Regardless, that is our reality. Gold is a means of protection and a great lesson in and of itself, so we should surely think about it here. It merely serves to attract attention and, in the long run, protect your wealth. That's about it. Sure thing. It is, without a doubt, an aesthetically pleasing metal. As much as I adore its appearance, the tactile quality of gold is nearly as appealing to me. Its weight is just astounding. Except for platinum, which is much denser but less attractive, no other metal compares to the sensation of holding that weight. And with that, I leave you. However, the story here is amazing. They are truly reaching a breaking point. Due to the recent spike in gold prices and the prevalence of related taxes, levies, and tariffs, it appears as though they are becoming increasingly dependent on the precious metal. This has led to 2 distinct scenarios that have effectively escalated into a precious metals war. Please share your opinions with me in the space provided below. I really hope you gained some useful knowledge from watching this video. I really appreciate you all watching and would be eternally grateful if you could like, comment, share, and subscribe.